Hello everyone, thank you for joining us today and welcome to this educational presentation describing my premier pullback strategy in action. Now for example, I'd like you to take a look at this current chart here. This was in Facebook going back to the beginning of April. Now someone looking at this would say, well Steve, no clear direction here. In fact, it looks as if we're in a range market. And even if we're in a range market, the last 4 or 5 bars have been going down. What if we break down here? Then this would probably be a good short. Well, with the strategy I'm going to be sharing with you today, that actually perceived that downtrend as an opportunity to buy. And it actually generated some buy signals based off of this little small intermittent downtrend. And it was just a pullback. That's why we call this a pullback strategy. So pullbacks like to buy at lower prices and they like to sell at higher prices. So the strategy I'm going to share with you today generated an actual cluster of buy signals right here. And coming into April last month, the stock went up 35 points till the end of April coming into May. Now on top of that, it just doesn't generate buy signals. As you look here at this very current chart in the Dow Jones Industrials. Now this was coming into this past week or so. We all know currently what the market has been doing, but prior to the current downswing, we had a nice little bounce here. A lot of people thought, well, we bottomed out. There's major support here. Looks like we're going higher. After all, the market seems to be acting very well. But with this strategy I'm sharing with you today, once again, a sell signal was generated just last week. And in the past 4 or 5 days, the market has fallen actually more than 450 points. We all see what the action is today. The market has fallen roughly 900 points since this sell signal was generated. So this is going to be a great presentation because I'm going to be sharing with you exactly how you can find these setups using just one of the basic rules of this particular method. And you're going to see how simple it is to actually find these setups on our new platform, the PTS Primo charting platform. This is the educational platform that teaches you how to trade pullbacks. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. Now, I teamed up with Pro Trader Strategies with one goal, and that was simply to educate you. And I think the best thing we have put together and devised in terms of educating you is our platform. Our platform has roughly 40 years of experience. That's how long I've been trading. All the things, the different tips and techniques and strategies that I've accumulated in my 40 years are on our platform. We've really made it simple for you so that you can, for the very first time, educate yourself with all the education we have there, and then simply make your own decisions. In my 40 years of trading, that is the only way one becomes a consistent trader, by really making your own decisions in the trading market. So that's really what you have to do, and no one really supplies that information. Everyone thinks they do, but they're basically telling you how to trade or just simply buy or sell here and you'll have everything answered. But what we do is give you a kind of a nice meal in terms of appetizers and an entree and a nice beverage and a dessert. And it's up to you to decide which ones you want to take. That's the way trading should be. It should be given based off of a standard format, but then you can decide how you want to apply that format. So we teach you this in all our courses and most especially on our platform, which you'll see today. Now today is going to be a great presentation. I'm going to be sharing with you a lot of examples using this particular method. But as always, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also remember that all examples are strictly for educational purposes only. As you're taking a brief moment to view our required disclaimer, once again, as always, I want to invite each and every one of you to follow us on Twitter. I've posted a lot of great educational information as of late. I believe on May 1st, we posted some great information about some sell signals that a lot of our strategies were generated, a lot of our methods were, and we've all seen what the market has done this past month. So there's lots of great free educational information as well as little financial bits of wisdom. So feel free to follow us on Twitter. Okay, so once again, we are different from other webinars and presentations you may have attended in that our sole focus is on educating you. Nothing more, all right? We're not here to tell you we have some system that's going to make you retire in a year or some great indicator that never fails. It's 100% correct, back testing 10, 20 years. We really don't believe in that. We formulated specialist trading going against that norm. And our belief is we simply want to educate you because the education is what will sustain you. not some fly-by-night system or not by some method or technique that bases itself on some convoluted logic. We just want to share with you the things that I've found in my 4 decades of trading that have worked. Now, my career started on the floor of the Pacific Stock Exchange. I was a specialist. That's where we get the name specialist trading. And when I first started trading on the floor, I struggled just like many of you may be struggling right now or may have struggled in the past. And I was lucky enough to have some mentors that taught me the same things that I teach my students around the world. So my goal here is to teach you the same way I was taught. And hopefully you'll be able to trade 40 years down the road as well. So we're not trying to force feed you signals. We're not telling you what to buy or what to sell. We're not telling you what the perfect time frame is. Those are all things you have to decide. What we're doing is basically teaching you how to trade so that you can decide for yourself. This is the same way I was taught and what has sustained me for 4 decades, and hopefully it will do the same for you. Now, since this is a classroom, once again, I want you to ask me as many questions as possible, but please wait till the end of class to ask questions. I have a lot of slides for you today. I think I have over 150 slides I want to share with you. So I don't want to stop at every slide to take a question, or we'll be here far too long. So please, if you have a question, please wait till the end of class to ask. I promise I'll get to each and every one of them. And the only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you have to leave early or if you're having technical issues, don't worry. We will send each and every one of you a link to this recording. All right, with that stated, once again, leave the questions for the end and let us begin today's educational webinar. We're going to be talking about strategy number 9, all right? And some of the highlights of this is that it's a very new strategy. In fact, we didn't launch it until 5 months ago, almost 6 months ago. That was January 1st. That's when we first started trading this and opening this up to the public. So I want to share with you a lot of the setups that have been generated in the last 5 months. It's a proprietary pullback method, and I have to state that it is probably the simplest and easiest method in terms of application that I've ever traded, because it only has 2 rules. Now, the good news is it's so simple that anyone, regardless of how long you've been trading, it doesn't matter if you're a hedge fund trader or it doesn't matter if you've never traded before, you will be able to apply this to your trading rather quickly. The bad news is because since it only has 2 rules, I cannot share with you really a lot of it today. I'm going to actually give you 50%. I'm going to share with you one of the rules, okay? But that's all I can really give you, or else it wouldn't be fair to the people. We have numerous students around the world who've already purchased this strategy. It can be applied to any market, any time frame, in any direction. I'll share with you examples in all those different categories. And one of the beautiful things about this is because it's a pullback method, you can apply options. Now, a lot of our strategies are based off momentum. So we're looking for momentum in one direction. Let's say we're looking for upwards momentum. But what that means is that price has to travel higher in order for us to verify that it's okay to buy. And that's fine if you're trading the stock or the currency pair or the future. But if you're purchasing options, well, because of that way that momentum-based strategies are formatted, you may have to pay higher because now that you're paying for something that's already in the money and it's already traveled higher, so the premiums are much higher. Now, pullback strategies are entirely different. They are looking for the overall trend in a direction, but they're looking to buy at lower prices and they're looking to sell at higher. So because of this, you can purchase options at lower prices many times. So you can apply options. If you're an option trader, this is a very good strategy to have. But remember, this is not 100% foolproof. That's why we ask our students to always paper trade first to get comfortable with the process. It's an extremely consistent strategy. I'll show you that in just a few minutes. But consistency means that there will be losses from time to time. So don't worry about that. I'll show you some losses and I'll show you how the strategy can recoup those losses. That's what we promote, consistency. We're not going to sit here and tell you that every trade is a winner. If someone did tell you that, I would be very suspicious of the method. Consistency is what you should be striving for. All right, so some things about strategy number 9 is that it employs 2 simple indicators. And now their relationship to the price automatically produces the signal. So this is what it's based off of. Now in an overall uptrend, buy signals will be generated during a decline. This is what we meant for option traders, how you can purchase at lower prices sometimes. Now in an overall downtrend, sell signals will be generated during a rally, during a bounce. So this is where sometimes, a lot of traders like to decide if they're a pullback trader or a momentum trader. One of the downsides to this, though, is that you will get less signals than you would with a momentum-based strategy. But that's okay. A lot of traders, myself included, are more inclined to trade pullbacks. We'd rather wait and have less signals, but have more of room for potential for a profit. All right, so let's just show you this generic picture here of pullback trades. Now, if you're not familiar with what a pullback buy is based off of, so what you want to look for first is some type of uptrend. Okay. Now, with any uptrend, rarely does it just go straight up. You usually have this type of move here in this bracket where you go up and you start to sell off and you kind of go back up and perhaps back down again. This sell-off is called the pullback. Now, if your strategy or if your method is sound enough, it will know that this is not the beginning of a downtrend, but it's just a pullback, a sell-off, or a decline, a short-term decline, while it gets ready to move up again. So this is where you want to buy, okay? So as you can see, we headed off in the right direction. The pullback is where you want to be purchasing right here. That works the same way on the downside, okay? A pullback trade does not like to sell while we're going lower, okay? This is the way a momentum-based strategy would be formatted. But a pullback trade waits for that type of snapback, okay? And we show here in this bracket again where we pull back to the upside. Now, a lot of people will think once they see this rally start, they'll think, well, that's the bottom. We've bottomed out, okay? We've hit some major support, and it looks like it's time for us to buy. Whereas the pullback trader, according to his method, knows that this is simply a short-term bounce before the trend resumes to the downside. So as a pullback trader, what you're looking to do is sell on that bounce at a higher price. This is why we say this is conducive. Pullback trading is conducive to option trading. You can sell at higher prices and buy at lower prices. All right, so let's look at some 2019 examples of actual trades that were set up. And these aren't all the trades. It produced a lot more trades than this, but I'm going to be sharing with you some of the most prominent ones and some of the ones that our students took and asked me questions about. And also some of these trades do have losses in them. I'm not trying to cherry pick what the best ones are or sharing with you only ones that were winners. We're going to show you ones that were losses. But the beauty of 2019 is that we had an up market and then we're currently experiencing a down market. So you're going to be able to see both up and down trades. And you'll see how easy it is for this method to recoup those losses when they do apply. Now, we have a good crowd here today. I know we just have some people that just joined us. Remember, if you joined us late, I will take questions at the end of class, okay? So many times, if you come in late, you'll start to ask questions. Please remember, in the next, I'd say 20, 25 minutes, that will be when the class concludes, and we'll reserve the last 15 minutes or so for questions, okay? So don't ask questions till the very end. Let's just walk through these examples here. All right, so let's look at MAN, all right? This was just last month, about a month ago. Once again, the way most traders trade, well, they say, well, gosh, nothing much happening here, but actually there is, because the first thing we want to do is apply the 50-period moving average. That is one of the indicators in this strategy. Why do we use the 50? Because it tells us the overall trend. If price is above, then the overall trend is down. I mean, I should say up. If price is below, then the overall trend is down. Now, if I backtrack here once again, without the 50, someone looking at this would say, well, it looks like we're rolling over. There's major resistance right here. I don't really want to do anything until I get a clear idea. But once you apply the 50-period moving average, you do have a clear idea. The idea mainly is that the overall trend is up. Even though the stock may be not doing anything, the overall trend is still up. Now, it appears that we have a small sell-off happening right here in the last 3 bars. That's the beauty of strategy number 9. It doesn't take 10 or 20 bars to determine a signal. Oftentimes it can have a signal generated just off 1 bar. But we have a sell-off of about 2 or 3 bars here, where most people would think, well, that's it, we're rolling over. A buy signal was generated in April, I believe the 10th of April, and as you can see, 13 quick points to the upside, okay? Once again, when you know the overall trend, the odds are in your favor that it's going to continue in that direction. With the pullback strategy, we're waiting for this sell-off to have a buy signal generated. Now, we can do the opposite with a selling example. Someone looking at this would say, wow, Steve, I don't really have a clear idea of what's going on here. But once you add the 50-period moving average, yes, you do. The overall trend is down. So even though you've had some nice snaps right here, a couple of bars here and a couple of bars there, we want to look at those as selling opportunities. We don't want to look at those for something that we can buy, because they're short-lived. We want to look at them as something we can sell. That's where a pullback method comes into play. Now, sell signals were generated here. As you can see, this first one and this second one didn't generate a very nice profit. In fact, you might likely would have had a loss if you used an aggressive entry. But if you use the standard entry, you would not have entered until here and had a nice profit. And then another signal was generated here, and look at the nice profit you had. Now, if you miss those and the trend is strong enough, there will always be more sell signals generated to the downside. Okay? Once again, this one would not have been that profitable, but had you taken any of these last three, you would have done very nicely. Now, someone would say, well, Steve, this is a very inexpensive stock. It's only 7 points. But remember, everything is relative. Even though this is a teen stock, it still lost 40% of its value since the first sell signals were generated. Let's look at another example here, STNE. Once again, someone looking at this would say, well, Steve, I've always been trained that I stay away from markets like this because nothing is really happening. Well, even though nothing may be happening in the daily bars, remember, always apply the 50-period moving average and then ask yourself where price is in relation to that. Obviously, price is above. So even though nothing may be happening in your point of view or some webinar you went to or some $10,000 class, there's a lot happening here. First of all, the overall trend is up. I'm not making that up. Some magic indicator is not, but the market's telling you the trend is up. It wants to go higher until it tells you it doesn't. And at the same time, while we're in an overall uptrend, we've had a short-term sell-off. So that's a perfect environment for a pullback setup. Now, strategy number 9 generated 2 buy signals at the very bottom of that sell-off. And look what happened here. March and April up 23 points. To see how that simple rule of being in sync with the overall trend will really make you a more consistent trader. How about LOW? Well, once again, it looks like we've made some type of a bottom here. After all, this could be support. And if you're a candlestick trader, look at this. This could either be a doji or a hammer, which are very positive. In other words, conventional wisdom tells you that that's the bottom and that we have a reversal in place and that we should start to go higher, okay? Because that's the way candlesticks work. They're reversal patterns, and that would normally mean this is the bottom of a downtrend. Start to look to go long. And in all actuality, we did go up very nicely in the last 3 bars. But that is, once again, not a very consistent way to trade. We want to find what the overall trend is first. And the way we do that is by applying the 50-period moving average. So what's the overall trend? The overall trend is down. This does not mean that we're going to be going higher. Sure, we may take a while to generate some type of downward movement, but right now, the market, not some guy in a webinar, not some trading guru, but the market's telling us it actually wants to go lower. And strategy number 9 generated a sell signal. Now, here's what we mean by consistency. All right, now, depending on what stop placement and what entry point you used, you may have had to wait for 3 or 4 days. Because if you used a very conservative entry point and a very conservative exit point that we teach you in the course, you most likely would have been stopped out with a small loss. But if you had a little bit more aggressiveness to your entry and as well to your stop placement, you could have been able to reap the benefits of a nice 14-point drop. Now, obviously, some news or something came out that caused the market, the LOW, to drop 14 points. We had no idea what that was. The only thing that informed us that this was going to be going lower was the actual stock itself, because it was below the 50-period moving average. Even though we had some up days, 1, 2, 3, 4, 5, 6 up days, 5 of those up days were below the 50, and we only had 1 close above, which is not enough to change your mind and think that the overall trend is up. You need at least 3 to 5 closes to tell you that the overall trend is up. Since the majority of the bars closed below, even though they were up days, that's still an overall downtrend. Let's look at TSS, and I want you to remember this stock because I'm going to show you another chart of this same stock in a few moments here, but this is a daily bar chart. Once again, someone looking at this would say, Steve, this looks terrible. Look, we have a bearish engulfing pattern right here. Stock's starting to go down. It's made a lower low. I mean, this is very negative. I took a candlestick class and I took a support resistance class, and this is telling me that this stock is going much, much lower. Okay? Once again, I was trained the exact same way 42 years ago, and none of those things worked back then. I stopped using them when I continued to lose money based off them. My mentor said the first thing you need to do is apply the 50. And always ask yourself, where is price in relation to the 50-period moving average? You can all start doing that right now. 50 period moving averages on just about every platform you can have out there. And always ask yourself what price is. If price is above, the overall trend is up. So I don't care if you saw a bearish engulfing pattern or a downward trend or there was major resistance here with the institutions. I mean, that's silly. That stuff has never worked for me, so I don't teach any of that. This is what has worked for me, so this is why I teach it to my students. This downward sell-off here is a buying opportunity. And according to the rules of this pullback method, strategy number 9, a buy signal was generated right here in TSS on a daily time frame. This was a couple of months ago in March. And coming into May, look at the stock went up very nicely. Now, it wasn't a tremendous move up, but good thing you didn't short it, right? Because it really didn't go that much lower. But as we're heading higher, buy signals continue to be generated. So this is a very strong sign that the market wants to go higher. And ultimately, just last week, actually, May, the stock was up 25 points since that original buy signal. Don't you think you would have wanted to purchase down here as opposed to thinking this was the top of the market? This is the beauty of this method. Now, WBA, all right? Most students would look at this and say, gosh, Steve, I don't know what this is going to do. I don't have enough information. I only have like about 3 weeks worth of data. Well, that's the way most people are taught how to trade. But there really is a lot of information here. Most people would say, well, okay, if you have to ask me, the couple of indicators I look at, this low here was not confirmed, and therefore I think we're going to break out. So this is getting ready to break out, right? All right, once again, most students are taught these things which have no consistency. The very first thing you need to find out is, what does the market want to do? Forget about what all these techniques and methods are telling you. What does the market want to do? And the only way to do that, to find the overall trend, is to apply the 50-period moving average. And according to the 50, the market wants to go lower until it tells us otherwise. Until we have 3 to 5 closes above that, it wants to go lower. So this is an opportunity rather than an opportunity to go long. This is an opportunity to go short. And strategy number 9 did just that. It generated a sell signal based off of its rule, and look what happened. Now, obviously, it went up. If you had a very conservative stop placement here, you would have gotten stopped out. But that's okay. Let's say you got stopped out. It generated 2 more signals here, okay? You think you could have made back the money that you lost on that first trade? And then there was another signal generated just a couple of weeks ago in May. So this is what we mean by consistency. If you got stopped out on one, don't play the victim card the way most traders do. Get back on the horse, because there's lots of signals being generated. About QCOM, okay? Here is a perfect example of how traders look at the markets. They say, Steve, absolutely no direction here. This stock has been going sideways for the last month or so. Why would I want to trade this? There's absolutely no direction. There's no clue as to what it wants to do. And for all we know, the institutions are really heavy selling into this. So I don't want to go against the institutions, okay? See, every decision I made and justified was based off of what someone or something else is telling me how to trade. This is the way we're taught as traders, to listen to the institutions, the volume, support and resistance. 42 years ago, I traded using these exact same things, and I couldn't make a dime off them. So why would I teach my students to use those things? There's no consistency, all right? Where is consistency? Consistency lies in listening to the market, because that's the source of what you're trading. That's the source of what you are looking at. So make your decisions based off of the source. And what is the source telling us? It's telling us it wants to go higher because it's above the 50-period moving average. That's the first thing you have to look at. It's that simple. It's really not that complicated. And you all have that ability right now. You can look at anything on your chart, any 5-minute chart, any monthly chart. It makes no difference. Any currency pair, any future. And always ask yourself, where is the price in relation to the 50-period moving average? Obviously, this stock, QCOM, was doing nothing last month, but it was telling us that the overall trend is still up. So I should not even consider going short this. There's no resistance here that I should be concerned about. I should be looking for buy setups. Now, strategy number 9 is always looking for that, on the lookout for, even if it has a small sell-off. And as you can see here, a buy signal was generated just off these 3 bars going down very slowly. 30 points coming into May, coming into this last month. Did we have any idea this was going to shoot up like this? Absolutely not. That's not a concern. You know, most traders are always looking to see, well, how high do you think this will go? Well, what's the estimate that this would, what are the earnings reports, or what's it going to be worth? don't concern yourself with those things. I mean, there's really no interest in that. There's no reason why you should be. The only thing you should be concerning yourself is listening to the market. What does the market want to do? If it wants to go higher, then you should look for some structure in the form of a strategy to go long. Now, someone would say, well, yeah, but Steve, where do I get out? Well, we have upwards of 6 or 7 different exit levels. That's your choice once again. If you want to choose a specific conservative exit level, that's fine. If you want to choose a more aggressive one that keeps you in longer, that's fine. But ultimately, you should make that decision, not me. I simply provide you with the information, okay? As your mentor, a good mentor does not trade for you. He teaches you how to trade so that you can make your own decision. Unfortunately, our entire industry is based on the opposite. You know, come to my website. I'll tell you exactly what to buy, exactly what to sell, exactly where to buy it, where to get out, the exact time frame, the exact market. If those things work so well, then why do 80 to 85% of all traders fail? It's because they're designed to take you out of the game. I've learned that in 42 years, that the entire industry is based off that. So why not just give sound, fundamental education that has stood the test of time and let the trader make their own decision? That's what my mentors did for me roughly 42 years ago when they were teaching me these things. I said, well, why don't you just let me, piggyback off of your trading decisions, and I'll buy where you buy and exit where you exit. They said, listen, Steve, we're not going to be here all the time. And when you have to go out on your own, you're not going to know what to do. You have to find your own way. And plus, not everyone trades alike. Someone may have enough courage to hold on to a position while it's losing money, or someone may feel totally uncomfortable. So you have to make your own decisions. You can't just totally mimic and piggyback off what someone else is doing. The good news is we provide you with dozens of different entry points, exit points, stop placements, so you can do that. And we work with you along the way to help you. All right, here's HCA. Another example. We're only looking at a couple of weeks here. Someone say, well, wait, we got support here, okay? This is where the institutions are buying. My institutional report in that $10,000 class I took, this is major support, also fits some Fibonacci support, so I want to buy this. This is a nice buy here. Look where price is. Why would we want to buy if price is below the 50? All right, that really is a recipe for disaster. Over time, I'm not saying that there won't be some nice setups, but over time, it really won't help you because you'll be out of sync with the overall trend. Okay, it's like saying someone swimming against the tide. Sure, they can do it, sure, but over time, you really won't reap the benefits as if you were swimming with the current at your back. So that's what you want to do. The same thing with trading. So if the 50-period moving average is the overall trend or the current, you want to be a seller off of this little bounce. And strategy number 9 generated a sell signal in HCA in the middle of April, 23 points to the downside. Very simple, very easy. Here's Facebook. Now that's the first chart we looked at earlier in the presentation. Once again, someone say, well, Steve, this is a range market. We're going up, I sell, we're going down here, I buy. But you know what? This last volume here didn't confirm it, so I think we're going to break down here. I don't think I'm going to do anything. All right. We don't look at any range or any support or any volume or any institutions. There's really no reason to overcomplicate your trading. First thing you want to do is, all right, we're heading lower, okay? So should we sell or should we buy? Well, we apply the 50-period moving average. And until we have 3 or 4 closes below, this is a very nice buying opportunity. Now we add the rules to strategy number 9, and we see that we have a cluster of buy signals. We've had 1, 2, 3 buy signals. Now this one wasn't so good, but these ones are pretty good here, and 35 points. So if you missed the first one and it didn't work out well, you got stopped out, remember, don't just sit there and lick your wounds and play the victim card the way most traders love to play. Get back and take responsibility. There are a lot of opportunities. The market is always giving you a second, third, sometimes fourth, 10th chance to get back in. And here, had you not taken that, you would not have had a chance to make back the loss and even more. Now, Tesla. We all know that Tesla's been going down. Here were 2 strategy number 9 selling points here. All right. Now, the stock went down tremendously in the beginning of February. But let's just say you're not convinced yet. You say, well, Steve, sure, this was a nice call here, but, I follow this indicator that I paid for, I had constructed, and it's not verifying this. After all, we broke the support, and the indicator should have confirmed it, but it didn't. So I want to be a buyer here, okay? I think we're going to come all the way back up here, fill this gap. All right, once again, this is the way most traders think. What's the 50-period moving average telling us? It's telling us that, sure, you may have a bounce, but that should be looked at as a selling opportunity. You shouldn't look at it to go long because we don't know how long that will last, and you may get left holding the bag. So look what happened ultimately. Sure, we had some nice bounces, but don't you think you would have liked to have sold on those bounces as opposed to buying them? Because after all, you would have been very quick and gotten out because we immediately made lower lows. Had you taken these sell signals, well, that's 130 points in your favor. But if you missed that, well, there were more sell signals generated here, here, a cluster here, and the stock ultimately lost 40% of its value coming into this last week in May. Now let's look at some different markets and some different time frames, because we know that not everyone just trades daily bars of stocks. We also know that not everyone trades stocks. Some people trade different markets. Some people trade 5-minute time frames. Some people are weekly or monthly time frames. And remember we looked at TSS? Well, let's look at it step by step. Let's show you the exact process you would take if you had our platform and you were trading strategy number 9. This is a monthly chart now of TSS. We looked at the daily chart before. Let's look at the monthly chart going back to 2012. Okay, it's been having a very nice upward run since 2012 up to 2016. And then what do we have here? A top, a really nice top. And guess what? That's a bearish engulfing pattern. We've all been taught that a bearish engulfing pattern signals the top and there's a very strong trend change. It's a reversal pattern. So we've gone down 1 month here, but we're most likely going to come down all the way to these lows, test these lows again. So you don't want to be an owner of this stock. In fact, you want to look to get out because most likely it's reached its highs, right? Okay. Sound familiar, right? This is the way we've all been taught to trade. This sell-off here is actually a buying opportunity. What's the first thing you would do with our platform? You would click on the buy-sell line because the buy-sell line is the 50-period moving average and the different features, how you can view it. So you would just simply click on the buy-sell line once that drop-down menu appears, and you have the 50-period moving average plotted. You know now that, no, you shouldn't be getting out of this. You should be looking at this as a buying opportunity. Now, you've taken the strategy number 9 course, you know all the rules, and you just want to check your work. You say, no, according to what I've been taught, this is actually a buy setup, but I just want to check my work. So you click on strategy number 9 tab here in our upper green strategy tab. Drop-down menu appears, click on signal arrows. You can check your work. You're right. So now you're learning. You see how this platform educates you and how you can check your work? Now, if there was no upward green arrow, well, then you would have to go back to your course studies and review the format because maybe you were looking at something wrong and incorrectly and you really didn't know how to trade it yet, so you shouldn't be trading. But because you properly identified a setup, well, maybe you want to consider trading or maybe you just want to paper trade it. But either way, that was a great setup because the stock went up 75 points coming into 2019. So this was a monthly chart. How about if we want to trade a 10-minute chart? What if you're an intraday trader? Well, here's a 10-minute chart of Oracle. Now, most traders would say, well, gosh, Steve, I'm a big technician. I don't look at fundamental news, so I'm kind of in line with you. But, this is a very bullish pennant here. We're going to break out most likely. It's being confirmed by the volume and by the other indicators I look at. If we break out of here, this is really going to take off, okay? Okay, I traded bullish pennants about 40 years ago. They didn't work for me. You know why? Because I wasn't applying them in sync with the overall trend. So how do we find the overall trend? Click on the buy-sell line. Excuse me. Click on 50-period moving average. Now, why would I go long below the 50? I mean, that's a recipe for disaster. So in all actuality, this little bounce here is a very nice opportunity to go short because we're below the 50. Now, I think I spot a strategy number 9 setup. I want to check my work, click on strategy number 9, click on signal arrows, and you see how the platform automatically educates you to see if you're in line. It's giving you this positive reinforcement telling you that, yes, you're able to properly identify a setup. Now, even though this was intraday trading, this is only a 10-minute chart, it went down 1.5, almost 2 points in the next hour or so. But if you're trading intraday, you may have 1,000 shares. That's $1,000, maybe $1,500 in the next hour. That's not a bad little trade. We can apply this to an hourly chart of the E-mini futures. Once again, a lot of E-mini futures traders will say, well, Steve, the momentum is going down here. I got to be a seller. But we apply the 50. In actuality, this is a buying opportunity. Strategy number 9 generated a great buy signal here on the 15th of May. 48 points to the upside, okay? Now, this is an hourly chart that took about a day or so to generate 48 points. We're not saying you would have captured 48 points, but you potentially could have. I mean, some students would have said, well, I'll take a point profit and I'll say thank you. Other students would say, well, no, I like to take 10 or 20. Okay, great. It's up to you. We do not tell you where to get out. We do not tell you where to get in. We do not tell you where to place your stop. What we do is we provide you with this information. 6 or 7 of those in all those categories. So you can decide what feels most comfortable for you. Trust me, if I told you where to get in, where to get out, I would say maybe 10% of you would follow those rules. The other 90% of the people in this class would say, well, I can't get in there. That doesn't feel comfortable for me. Or I can't get out here. That's too early or that's too late. So the great truth is that no two traders should ever trade alike. You have to find your own sweet spot. The good news is that we provide you with those different spots. How about British pound? Okay, this is a currency pair. We have no difference in this because we're looking at a different market. All right, someone looking at this will say, wow, we really bottomed out here. Okay, this is a bullish engulfing pattern. This is a very strong sign that the British pound is going higher. And it did. After all, look at this nice rally we've had for the last week. Is this something we should continue buying? Well, first thing we do is click on the buy-sell line, click on 50-period moving average. No, we've only had one close above. The very next day, we closed below. So this is not enough for us to say that we have a valid upward trend. We need at least 3 closes above to tell us. 3 consecutive closes. So far, the overall trend is still down. And after studying the course, you say to yourself, you know what? I think there's a strategy number 9 sell signal here. You check your work, you click on strategy number 9, click on signal arrows. Guess what? There were 3. Now, the first 2 weren't that profitable. If you had a very tight stop, you may have been stopped out. But remember, always get back in because had you not, you would have missed a way to capture what you had lost on the first couple of trades and made even more, potentially more, if you decided to do so. 435 pips in the next couple of weeks. That's over $4,000 per unit. Okay, so you see the consistency in these methods. Now, I want to share with you a news event because I know a lot of you are always concerned. One of the most common emails I get from my students is that, Steve, well, what about the news? When a news event comes out, how do we know this is going to work? Well, there's no way to know 100%. But oftentimes, a lot of our methods will generate signals prior to a news event. And oftentimes, we've been told by our students as well, not guaranteed, but oftentimes we've seen that they're in sync with the news prior to it being announced. For example, in January of this year, Yahoo Finance reported Apple loses $50 billion in market value after warning of rare revenue miss. Okay, terrible news, right? If we look here at the chart, this is where the news came out. Guess what? 2 days prior to that, a strategy number 9 sell signal was generated. Did we know that that news was going to come out? I mean, did the CEO of Apple call me up and say, hey, Steve, we're going to make a negative announcement in a couple of days. You may want to tell your students around the world to go short our stock. No, I had no idea that news was going to come out. Well, someone would say, well, then Steve, how would you know? Because the market told us. Price was below the 50. The rules were met with strategy number 9 and 16 points in 2 days. Do you think you would have liked to have had some puts in that, for those 2 days? Would have been a nice way to start off the new year. Okay, so let's review before we go into question and answers, all right? We're talking about our very new strategy. And by new, I mean it's only roughly about 5 months old. It was only launched 5 months ago. Designed to trade pullbacks with 2 simple indicators. Now, I shared with you one of them, which is telling you what the overall trend is. The other indicator I cannot share with you, and basically it's based off of what the relationship is with these 2 indicators and price. Now, this can be applied to any market, any time frame, in any direction, as you just saw. One of the beauties is you can apply this with option trading. So if you're an option trader, this is really a good course because, you're buying low, so therefore the premiums won't be so high in your options. Also, you're selling higher, so the premiums won't be so high as well. Remember, all of our strategies have a high level of consistency. Now, most students think, well, consistency means that it consistently makes winners, right? No. Consistency means that we are aware that there will be losses. See, you have to turn it upside down. But that those losses oftentimes will be able to recoup. The losses will be able to recoup in maybe the next trade or 2 trades later. So that's what consistency means. 2 steps forward, 1 step back. We are aware that we will have losses. That's okay. That's why we ask and also require that all of our students paper trade for us so that they fully understand the process before applying real funds. Now, we have a great offer for all of you today for attending in today's market. We know that you'd rather see these markets while they're happening, but this is a great offer today. This is our new super strategy special. We're going to give you strategy number 9 along with 1 year of our platform. Okay, so you'll be able to use it and see how simple it is to apply on our platform. This is detailed video course instruction, all the entries, exits, and stop placement, the entire course rules. This also includes educational correspondence. Now, by educational correspondence, this pertains only to the strategy. I know a lot of our students sometimes, they say, gosh, Steve, this strategy works really well. I'm really grateful for it. I go, great. But remember, it's your strategy. You can apply it any way you like. And they said, you know, you said before that you would give us some educational correspondence. So I want to know what you think about interest rates. That's not what the educational correspondence is. I'm not going to be talking about the markets or my opinion on what's going on economically. I'm giving you educational correspondence in the strategy, and that's all we care about. Remember, I'm not here to tell you how to trade or what to think about interest rates or fundamental news or other, types of trading methods. I'm only here to teach you these specific methods. That's all you really need. Now, we're giving you 1 full year of the platform. This is going to make it even simpler to apply strategy number 9. Now, the beauty of the platform is that it just doesn't come with strategy number 9. You also get some extra bonuses as well, and that includes the scanner. You can scan for nightly signals. Let me show you how simple it is. With our scanner on the platform, all you have to do is click on the scanning page, and it will automatically download whatever data you're interested in looking at. It can be S&P, it can be futures, currency pairs, Bitcoin, whatever market you trade, whatever time frame. And then you just simply scan for that market and for all that data. And this usually takes less than a minute. And then you'll be prompted with a series of either green or red horizontal bars. All that means is that the green horizontal bars mean there's a buy signal in the corresponding stock or future or currency pair. The red ones mean there's a sell signal. Now, let's say I had given this presentation a month or two ago, and you became a student, and you're learning how to use the scanning capabilities of the platform. Here's what you could have scanned for. Here's what an example in X-ray. This was at the end of February coming into March. Okay, we're above the 50. We have a nice sell-off coming in here, and the scanner would have prompted you to that there was a buy signal generated at the end of February in X-ray. Stock jumped up 8 points in 2 days. Now, you had a number of ways to enter. You could have entered that day. If you wanted to be a more aggressive entry, you could have just scanned a couple of minutes before the close and seen that there was a buy setup and just said, hey, I've been looking to buy this stock, and so you jump in. You could have waited for the next day. You could have placed a limit in there. There's a number of different ways to enter. Either way, you had plenty of time to take advantage of that 8-point gain. What about if you're a swing trader? All right, let's look at ROKU. You could have scanned for this just a month ago on the 15th of April, looking at weekly bars and seeing that we're above the 50 and we have a nice sell-off occurring, and here is a buy signal on the 15th, the end of that week in ROKU. 40 points coming into this last week in May, okay? 40-point gain based off of the pullback. Now, let's take it a step further. Let's say if you had joined this just a couple of weeks ago, all right? And let's say you're looking at the Dow, because you can actually apply this to indices as well. Here's a picture of the Dow, okay, on our platform. Someone looking at this once again would say, wow, there's a nice bounce here. You know, I took this $10,000 course where the institutions called for a bottom at these levels, so I think we're really going to rally, all right? Once again, this is the way most traders justify trading, based off of what someone or something else is doing. What is the market doing? What is the market telling us? Well, you apply the 50-period moving average, because that's what's going to tell you. And we have been below the 50-period moving average since May 6th. All right? So for 2 weeks, the market is telling you it wants to go lower. I don't care how much we bounce. The market has been giving you a tremendous clue for the last 2 weeks that it wants to go lower. Why would I listen to anyone or anything else? Now, a lot of people have been surprised by the market as of late, but our students haven't been, because they've known that the Dow and most of the other indices have been below. If you look at our tweets, you've seen that we've been tweeting about it for the last 2 weeks. All right? So the market told us it wanted to go lower, and guess what? It also generated a sell signal in the Dow. Now, obviously, if you can't trade the indice, but you can trade the diamonds based off that. But let's just say you were thinking about buying some stock. You wanted to purchase some stock. You're thinking, well, the market's going to go back up, make new highs, right? Had you seen this sell setup, that may have given you reason to pause and to say, you know what, if there's a sell in the Dow Jones Industrial Average, then maybe I don't want to buy some stock right now, okay? And that would have been a good choice because we've seen how far the market has fallen. I took this slide last night. We all know how low the market is. Before I started here, the market was down another 400 points. So the market's down close to 900 points. I don't know. For all I know, in this last hour, it's dropped another 500 points. I don't know. But we don't care. All that matters is that we are in sync with the market and we have a high probability for consistency with this strategy. So this just happened this past week. Strategy number 9 generated a sell signal in the Dow, which could have given you a great warning before this market sold off this past week. Now listen, 2019 is just about half over. In another 30 days, we'll be half through 2019. A year from today, you will have wished you became a member of this course. Don't waste the last part of 2019 still trying to figure out how to do it. We're going to give you a great offer today, okay? We're going to give you our new super strategy special. That's strategy number 9, along with 1 year of the PTS Primo charting platform, okay? Now, normally this would cost close to $4,800. I realize that's a lot of money. We're going to slash that price. We're only going to charge you $29.95. You're going to save over $1,700. But on top of that, if $29.95 is still too much for you to come up with in one lump sum, don't worry. We're going to offer you payment plans for a limited amount of time. So for a small deposit, you can still be up and running and trading strategy number 9 along with 1 full year of the platform. Remember that 1 year of the platform, that's over $1,700 value. Well, we're taking that totally off. We're giving you that for free. So for $29.95, you get full strategy number 9, course rules, all the entries, exit, stop placement. You're going to get the 1 year of the platform. You're going to get the scanner along with dozens more of different informational techniques on our platform and strategy educational correspondence with yours truly. Remember, you can have a payment plan if you'd like. All you have to do is contact Pro Trader Strategies, set up some type of small deposit. You can still be up and running. Here's how to take advantage of that. Contact Pro Trader Strategies, my sister site. I designed the platform. They are in charge of all of our discounts and pricing. You can call them directly at area code 310-598-6677. In fact, I would really suggest that you do that because they can give you more information concerning pricing and they can structure a payment plan. If $29.95 is just too much for you to come up with in one lump sum, they will be happy to work with you and put together something for you, okay? Now, that link at the very bottom is the link that will take you to this online sign up and it'll have some more information about the strategy. But it's not a live link, so go to the chat box on the far right-hand corner of this GoToWebinar column, and there's a live link that's been posted. All right, if you're having any technical difficulties logging on, don't worry. Just contact Pro Trader Strategies. They would be happy to answer any questions. Now, I promised you I would answer questions here concerning what we went over today. So if you have any, now is the time to ask. All you have to do is simply go to the question and answer box, and I promise I will answer everyone to the best of my ability. Okay, I got a question here. Some people are saying, well, Steve, what if I like to use TradeStation and I enter my orders through TradeStation? Okay, there's nothing wrong with that. You can also still use our platform. And what a lot of traders do is toggle back and forth. In other words, they'll enter their orders based off the platform. Let's say it's TradeStation or Metastock or MT4, let's say. And then they'll toggle back on to our platform to get, the signals generated and to find out more information. Okay, so there's a lot of great ways and simple ways to use it. Don't worry if you already have a platform that you're familiar with. A lot of traders I know use 2 or 3 different platforms. I use 2. And one of them is the PTS Primo charting platform because, I look for setups and there's so much information. There's over 40 years of information in one spot. It's all one click away. It's such ease of access, and I designed it that way, okay? Another question, someone's asking about the scanner. They say, Steve, can I scan for different markets like currency pairs? Yes, you can. That example I showed with the British pound, that's data taken from the platform. Now, one of the things I have to tell you is that the beauty of our scanner is that we provide you with so much data. We have data for the DAX exchange, for the Toronto exchange, the Japanese markets, European markets. We also have Bitcoin data. We have intraday data, so if you'd like to scan intraday. We have weekly, monthly data you can scan for, S&P, NASDAQ, currency pairs, futures. So it's up to you. And in fact, we also show you ways in which to create your own list. So a lot of traders like to use their own list of stocks or markets that they like to track. So let's say you have 20 markets that you currently watch. We'll tell you how you can make your own basket and then do a nightly scan of those. It's that simple and that easy. So it's a great way to learn, and it's all there. And one of the pet peeves I have is with things that are so complicated that they're just so complicated after a while you don't even want to use them. I know I've done that. I'm sure many of you have done that with platforms in the past, where after about an hour or so trying to figure out how to pull up a chart, you just say, you know what, I'm not interested in this anymore. I'll take the trial and I don't want to do it. After using our platform, we have so many testimonials by students telling us this is the simplest platform I've ever used. Everything is designed so easily and so quickly to get me where I want to go from A to B, and it's just one click away. I specifically designed it that way because that's the type of trader I am. I don't want to waste time trying to figure out how to load up a scan or how to load up a chart. I just want it right there when I click it on. And that's the beauty of the PTS Primo charting platform, okay? So once again, here's the information you need. I would suggest, if you're on the fence, I totally understand, contact Pro Trader Strategies. They would be happy to negotiate with you and put together a payment plan. So for a small deposit, you can still be up and running as early as today. We have great tech support. They'd be able to help you load the platform on your machine, whatever you're using, and you can be up and running looking at strategy number 9 setups tonight. Okay, so this is really a great way. We try to make it simple for you. If you have any tech support or pricing questions, do not hesitate to contact Pro Trader Strategies. They have trading consultants manning the phones right now. They would be more than happy to answer any of those questions. And trust me, there's no obligation. They will not lock you into a price of something you do not want to do. They just want to be there to help you, okay? So once again, contact Pro Trader Strategies, 310-598-6677. And as we conclude, I hope you saw the attention to detail we give when really trying to educate you. That main thing is the 50-period moving average. You can start experimenting with that right now. And I would almost encourage you to do that just to see the power of that simple tool if prices above or below. Once you see how powerful that is, I'm sure that will help you to decide in becoming a student of mine and joining the Strategy Number 9 course, okay? So thank you all so much for attending. Have a great Wednesday. And as you take one last look at our disclaimer, I'll see you next time, okay? Bye-bye.